Okay, good morning. Welcome to Chaikin PowerFeed, your daily market digest for Thursday, May 24th, 2018. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter at @DanRusso_CMT. And every day, PowerFeed TV is brought to you by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can get your free daily Chaikin PowerFeed at www.chaikinanalytics.com/PowerFeed TV. So quick recap of yesterday's action. U.S. equities finished higher in Wednesday trading with all the major markets closing in the green. Treasuries were notably stronger across the curve and the 10-year yield fell to 3% or so. The dollar was down on the risk-sensitive yen cross, decidedly risk-off tone to the market in the morning before snapping back after the Fed minutes. Gold finished down 20 basis points and oil was lower, but ended off the worst levels of the day despite a large unexpected U.S. inventory build. WTI settled down about 50 basis points. Utilities, technology, and REITs outperformed. You can kind of see the defensive nature there with utilities and REITs outperforming, as well as the bid to bonds. Energy, industrials, and materials lagged, with oil falling. The commodity sectors fell as well. Breadth on the NYSE was positive 1.1 to 1. Breadth on the NASDAQ was positive 1.2 to 1. And as I said, stocks reversed early losses to close up on the day following the release of Fed minutes, which were viewed as more dovish than expected. So turning now to our key levels, as we've done for the past few days, we'll highlight the range that's been in place for the past week and a half or so. Support at the 27.10 level and resistance at 27.41. 27.41, the key level that I'm watching. If we break through there, that gives me a ton of conviction that we're going to 2800 and that the secular uptrend for equities is in fact resuming. Below that, we've got some support in the 26.58 to 26.75 zone. That's where we had trouble breaking through back in late April, early May. And then, of course, the 200-day moving average is down at 26.31. So those are the key levels that we are watching. As we get to the desk this morning, futures are kind of pointing to a mixed opening following a mostly weaker session in Asia overnight that saw the Nikkei fall about 1%. European markets are stronger here in trading this morning. So your market in a minute, delivered to your inbox every day as a PowerFeed subscriber. Stocks reverse morning losses to close higher. The 10-year back at 3%. We'll take a look at a chart of the 10-year in just a few moments. Software and services, their leadership in technology, that is the industry that I am highlighting today for Chaikin Analytics subscribers. We'll do a little bit of a deeper dive on that, as well as look at an indicative stock. Also, every Thursday, I highlight market breadth, which in my view confirms and supports a continuation of the secular uptrend. We'll look at why I think that's the case. And as I said, futures point to a mixed opening. So your major indices and where they stand according to the Chaikin Power Bar. Again, the Chaikin Power Bar tells us how many stocks we rank as bullish or very bullish, how many we rank as neutral, and how many we rank as bearish or very bearish. You can do this from the major indexes as well as ETFs. We can see the Dow is still skewed to the bearish side, 2-to-1 bears. S&P 500, while it's seeing some improvement over the past week and a half, is still skewed bearishly at 84 to 113. NASDAQ starting to get some traction to the bullish side, and we like to see this. That's a sign of kind of growth stocks outperforming, and we like that. 15 bulls to 12 bears, and as we've been pounding the table on for the past 2 weeks, small cap outperformance relative to large cap is a theme we think is going to be continuing into the future, although we have lagged now 2 days in a row. Here we have 549 bullish or very bullish stocks for 286 bearish or very bearish stocks. As we said, bond prices ticked up 73 basis points yesterday. That drove the 10-year yield back down towards 3%. We'll take a look at that in a moment. So according to the Chaikin Power Bar, small cap stocks are more bullish than large cap stocks, and the major indexes are mixed, and mixed gives you consolidation here for the S&P 500. Again, we view the consolidation as within the context of a secular uptrend. We are above a rising 200-day moving average. Momentum shifting to bullish ranges, and Chaikin money flow has been bullish since early May. So that gives us conviction that the secular uptrend is likely to resume. Our stock of the day, so every day Chaikin PowerFeed subscribers will receive a stock of the day based on our Chaikin Power Gauge. Today's stock comes to us from the banks and thrifts industry. Cullen and Frost Bank closed last night at $118.19, down 1.2%. Obviously, the banks were going to be under pressure with yields falling. But let's look longer term. A very bullish power gauge rating for ticker symbol CFR, and the Chaikin power gauge rating for Cullen Frost is very bullish due to strong price volume activity. That's in our technicals bucket, and very positive expert activity and attractive financial metrics. So we roll these four factors up to get this power bar. Let's look at the stock now. We know we are very bullish. We know we have a strong trend in a strong industry. So this is the type of name we want to be looking at. As I like to say, we're fishing in the right pond. Next, we come down. We read the chart from the bottom up, and we can see the ribbon here. The ribbon at the bottom tells us where the power gauge has been over the past year. And you can see we're currently on a very bullish rating. And importantly, we want to see the market in agreement with our model. That means relative strength versus the broader market. In this case, the SPY, we want to see that positive. And for CFR, it has been positive since late January, early February, and it's really on some of the strongest positive readings we've seen this year. So we call this our dynamic duo. The market agrees with our model. So we know that this is a name we want to be doing work on the long side. Next, we want to check how it stacks up tactically, whether or not we want to enter the trade right now. Our overbought, oversold indicator tells us we are closer to oversold. We can see the stock sold off yesterday, getting us closer to an oversold condition. I'm going to keep an eye on that. Should that metric go to an oversold condition, that would set up a compelling entry for me as long as we're still bullishly rated and outperforming the market. We are above a rising long-term trend line. We're kind of above the middle. This is our 21-day moving average. So in the way I look at this, I think you want to buy pullbacks in CFR to the $110 to $115 level. Good support at 110 at our rising long-term trend line, as well as the top back here in March. So I would expect this stock to find support at 110. So should the stock continue to drift into this 110 to 115 level, I think it looks compelling for an entry. Chaikin money flow, a little mixed of late, but for most of this year has been pretty bullish. So CFR going on my bearish watch list for a bullish watch list, rather, looking for oversold conditions and a pullback to 110 to 115 for me to think it's interesting on the long side. Our sector tracker tells you sector movement in the major groups over the last 5 days. We can see here that real estate and utilities have bumped up into the top three. These two have been at the bottom of the list for the better part of a week and a half. This is a function of rates moving down yesterday. The industrials continue to be strong as trade tension kind of eases a little bit. We've seen some bullish activity in the industrial stock. Technology moving up. This is what we want to see. As I've been saying, technology is 26% of the S&P 500. We want technology to be leadership to drive the market higher. Bottom of the list, materials kind of getting hit yesterday with the sell-off in commodities. Financials getting hit yesterday with the sell-off, with the bid to bonds and the decline in yields. Consumer staples continue to be at the bottom of the list. So we'll continue to watch these trends. I wouldn't be surprised. My view on rates is that they are, in fact, going higher. Downtick here yesterday, no big deal. Still above the 3% level. We'll actually look at a chart of the 10-year. I think there's support at 2.9. I think the path of least resistance is higher for bond yields. That should help financials longer term. That should hurt real estate and utilities longer term. Our sector in focus today, speaking of longer term, is the Capital Market Services Group. Our Chaikin power bar for this group is skewed 3-to-1 to the bullish side. 15 bullish or very bullish stocks for 5 bearish or very bearish stocks over the past 6 months. Capital market subsector has outperformed the S&P 500 by 5.72%. And as I said, that power bar ratio, which measures future potential, not what we did yesterday, but future potential, is very strong with more bullish than bearish stocks. Currently ranked number 8 of 21 subsectors and moved up 1 slot over the past week. Some of the indicative stocks in this group that maybe you want to do some work on the long side are Raymond James Financial, Bank of New York Mellon. Those of you who were here with me on Tuesday will see that we did an analysis of Bank of New York in a bullish manner. Another name that looks compelling on the long side, and one that I called out about a month and a half, 2 months ago for Chaikin Analytics subscribers as a long, is Interactive Brokers. So let's take a look at one of those now. Interactive Brokers. As I said, I called this out back in the late March, early April timeframe for Chaikin Analytics subscribers as one that I thought was compelling on a pullback. You saw it got oversold. So let's rip it apart and go through how we do our analysis here. Very bullish stock, strong trend in a strong industry. So we're fishing in the right pond. Let's take it down to the bottom of the chart. The ribbon you can see here, it has just been bullish. This stock has been bullish since the late September, early October timeframe of last year, continues to do so. And look at the consistency and persistency of outperformance relative to the SPY. This is a name that we want to, have on our bullish watch list and buy it when it pulls back. You can see this is a textbook uptrend. Currently, kind of middle of the range on our overbought, oversold indicator, closer to oversold. So we want to maybe see this stock back up to the 75 level, become oversold, and that would give us conviction to enter the stock. You can see Chaikin money flow has just been persistently bullish, other than a blip kind of to start the year when the whole market got hit, has been persistently bullish for the past 12 months. Earnings surprises, it's been positive earnings surprises the last 3 quarters, above a rising long-term trend line. I mean, this is what when I was studying to become a chartered market technician, this was kind of what we viewed as a textbook uptrend. You can see it here. Buy a pullback in IBKR to the $75 level. Have this one on a bullish watch list for sure. Trending stocks, some of the gainers and losers yesterday: Tiffany, Ralph Lauren, and Lowe's, all moving higher following positive earnings surprises. Advanced Auto Parts moving higher. All of this is really earnings related. When we see stocks kind of jump like this, 23%, 14%, to me that's a signal that something could be changing for the stock. You want to add those to a watch list and keep an eye on them. Same thing on the downside. If you own Hewlett Packard Enterprises, HPE, something could be changing here. Maybe you want to take some profits. GE, been in the news lately, down 7% following some comments from their CFO yesterday. Target down on earnings. Xilinx, a very bearish stock in the semiconductor group. Keep an eye on this one. You probably want to sell it on rallies. And the media sector has just been not performing well in OMC and indicative stock there, down 4% yesterday. So when you see big moves like this, could be an indication that something is changing. Maybe you want to do more work on them. I like to keep an eye on them following big moves, especially Tiffany and Ralph in the retail space. So, as I said, we would take a look at the 10-year yield. Here's a chart of the TNX, the 10-year U.S. Treasury yield index. And look, you can see the yields have been moving higher. We're above the 50 and 200-day moving averages. There's support here at the 295 level. We closed yesterday at about 3%. So, a little pullback after this move higher. Not too surprising. What we want to see, if you're in the camp of rising rates, as I am, is you want to see the RSI remain in bullish ranges for the yield. That if we flip this, it would be bearish ranges for bond prices, and that is exactly the case. We're still above the 50 level, still above the rising moving averages, above support at 295. I think the path of least resistance is higher for bond yields, for treasury yields. That should hurt utilities, hurt real estate, help financials. Keep an eye on yields. We always do. One of the sectors and industries that has been leadership, and we highlight the software group today, software and services. Here's the ETF, the XSW. Again, I hate to throw the word around too much, but this is a textbook uptrend above the rising 50 and 200-day moving averages. Kind of broke out recently above the 79 level, pulling back a little bit to retest it there. Would not be surprised to see the software ETF hold above the $78 to $79 level, setting up a compelling entry for ETF traders as RSI stays in bullish ranges. And for most of 2018, Chaikin money flow has been positive. Let's take a look at one of the indicative names in the group, EPAM Systems, ticker EPAM. Another textbook uptrend above the rising 50 and 200-day moving averages. You can see that here. The RSI is in bullish ranges, and Chaikin money flow has been predominantly bullish for the past 12 months. Pulling back here a little bit, look for support in the 118 to 120 level to set up a compelling entry point in ticker symbol EPAM. Finally, on the breadth front, here's the percentage of stocks above their 200-day moving average. You can see it's been gradually ticking up even though the market's consolidating. We're back above the 60 level. That is a level generally associated with positive returns for the S&P going forward. One of the breadth metrics that I like to keep an eye on here. We'll continue to do so. We'll continue to look for it to improve. So let's take out the power bars for the major sectors. And something that jumps out at me is we now have 5 sectors with bullish power bar ratios, and above the S&P 500, they are healthcare, energy, financials, materials, and technology. These are the groups where you want to go looking for long ideas. Take a look. Utilities, real estate, consumer staples at the bottom of the list. That's where you want to look for names to prune from your portfolio or potentially short stocks. Get your powerful, profitable stock ideas and more every day with Chaikin Analytics. Have a great day, everyone.